prosperous new year. In the room, I welcome Mr. Alexander Gerding, our Managing Director, Mr. Narendranath J, Baliga, our Chief Financial Officer, and online joining us, Anil Chaudhary, our Manufacturing Head and Whole-Time Director, to this Fund Managers Meet. All the participants are requested to note that this meeting has been recorded and the audio-visual recording of this meeting, together with the presentation and the meeting transcript, will be uploaded on our website and also submitted to the stock exchanges. Further, I would also like to brief you on certain important points for smooth conduct of this meeting. All of you have been placed on mute mode to avoid any disturbance arising from the background noise. During the question and answer session, the names of those who have already registered with us for asking questions will be called first, and thereafter the respective speaker will be unmuted. Others who wish to ask questions may raise their hand by clicking on the raise hand icon on the Microsoft Teams page. I would request all speakers to be brief while asking their questions and queries. I now request Mr. Alexander Gerding and Mr. Narendranath J. Baliga to give a presentation on the company's performance for the quarter and half year ended 30th September 2023 and other related topics.
Thank you, Manohar, and a very warm welcome to all the analysts and fund managers on the line this Friday afternoon. And also from my side, happy Diwali to all of you and your families. And yeah, we are very happy. I'm very happy. This is my second time hosting this analyst and fund manager meeting, and I'm very happy to be here with Manohar, Naren, and Anil, who is joining us on the line. So here you see the participants for today. I think Manohar has already introduced us.
We go to the next slide.
So we start like last time and like every time. First, forward-looking statements. As you are all aware, we discuss only matters that are in the public domain. We do not provide any forecast about the future business situation, and we do not comment or give guidance on future results or business outlook. We start every meeting with a safety moment, so we also want to start here. Every year we have what we call Global Safety Weeks, and we had it this time in August, where at all our sites we train and increase and raise the awareness on safety. So here you see a picture of Mangalore, our Mangalore site employees for the Global Safety Week in August. And this safety awareness is also visible in our safety performance and track record. So I'm happy to say that we have not had any high severity incident or any high severity process safety incident this year to date, January to September, same as last year. So a very solid track record on safety. And this is also recognized in the industry. So I'm very happy to share that in September, BASF India Limited received the Best Responsible Care Company Award by the Indian Chemical Council. So a very, very nice recognition and big thank you and appreciation to all of our teams at our different sites in India. Now, you are all following the global situation, the global developments. I would say the global context for the chemical industry compared to what we presented in May at the last analyst conference has not fundamentally changed. So the war in Ukraine and Russia is still ongoing. There is still very soft demand globally. In Asia, but also in Europe, in North America. So this situation has continued in the last month and has put a lot of pressure on the chemical industry. Now, obviously, starting October, we have a new crisis developing in the Middle East. So that's certainly not necessarily helping, to solidify and stabilize the global, geopolitical and macroeconomic stability. But in India, I think India is doing quite well. And although India is not fully isolated and insulated from all these global developments and regional developments, I think we have had a very resilient GDP growth, around 6%. I think if you compare that to most of the large countries, I think it's very solid, and the projections also going into next year is similar. Inflation around 5% and interest rates about 6.5%. Have been stabilizing, maybe on a little bit of a higher level historically, but stabilizing. The Purchasing Manager Index, which tells us a bit about the confidence of purchasing managers, whether an economy will be contracting or continuing to expand. It has been consistently above 50 in India, which means that there is positive sentiment for continued expansion. Nevertheless, the Purchasing Manager Index has come a little bit down. So it was around 58, and I think it went to 57, but it's still above 50. And consumer confidence is on the higher side. And maybe the festive season also helped in that aspect. So I think macroeconomically for India, quite some positive signs. If you look to the right side of the slide and look into the different industries, I think we've seen a very robust festive automotive demand, and automotive industry is obviously a very important industry for us that we cater to. There have been strong construction activities. In the agricultural field, I mean, we have had a delayed monsoon. So normally the monsoon starts in June, it started in July, and then August was very dry on top. Yeah, so we not only had a delayed monsoon, but also a very dry August, which certainly impacted the agri sector. The fast-moving consumer goods industry, last time we spoke that we had a quite difficult rural demand in that space. I think now July to September, that has picked up a bit, has increased a little bit. So we're seeing some developments there. And the chemical sector is still experiencing margin pressure. So pressure from the pricing side is still there. And on the cost side with higher energy prices is also putting still pressure on the margins. Yeah, so we're not seeing that the margin pressure is really fundamentally changing. So similar picture there as we had in May. Nonetheless, I think, and Naren will now go a little bit more into the details of our performance in BASF India Limited performance in the first and second quarter. Nonetheless, I have to say the team has done a fantastic job to navigate through these not so easy times with very, very strong volume development. Yeah. So with that, I would stop here and hand over to Naren to tell you a little bit more about our financial performance.
Thanks, Alex. And again, good afternoon, everyone. So as usual, we'll go to the financial performance first at the segment level. Yeah, always the question comes up, what are the 6 segments we have? So on the left, you see the 6 segments and the respective business units involved in each of the segment. Like Agriculture Solution is a segment by itself. In other cases, we have at least 2 business units which are part of the segment. On the right pie chart, you see the breakup of the 6 segments, and Agriculture Solution happens to be at 17%, because that I'm sure is one of the questions that somebody will ask later. How big is the agriculture business in BASF India? So that's 17%. However, the material segment is the biggest in the company, almost 1/3, 28% is material segment, which is kind of performance materials and monomers. And second highest is nutrition and care, nutrition and health and care chemicals. Yeah, this is the second, and the Agriculture Solution happens to be the third. What I wanted to highlight here is the well-diversified portfolio that BASF India has, very similar to the parent company, where all the 11 business units are present and representing their business in the country. So no matter which product is required to the customer, we have the capability to bring it to India and sell it in India. Coming to the numbers, you might have seen this in our press release. On the left is quarter on quarter. So there's a 3% growth in revenue compared to July, September last quarter. But at the same time, the profitability has improved significantly, almost 1/3 improvement by 50 crores. Yeah, what I want to also highlight is that the January to June quarter was the best ever we had last year, and we are comparing with that when we compare the half year numbers. Yeah, with a 5% reduction in sales, the PBT before exceptional item. Of course, there is no exceptional item this time. So the PBT is the PBT before exceptional item is down by 15%. So in the first quarter, that is June quarter, we were down by 100 crores as compared to the same quarter last year. And for the September quarter this year, we are plus by 50 crores, as you can see in the left. So net, we are 50 crores or 60 crores lower than last year, where January to June 2022 was the best ever half year that we had. It's similar to global parent company also, and in India also we had the same situation. And we are comparing that quarter here of April to June. The volume growth was good, and here this is what I wanted to highlight: the quarterly numbers starting from September 2020. That is 13 quarters you can see here, and 13 quarters because September 2020 compared to September 23, you can see how we have grown over the period. June and September 2022, you saw in the previous slide, 7,470 crores was the total sales. But at the same time, we had to compare it with the 6 months of this quarter instead of going quarter by quarter. Hence, you see that golden rectangle there, where the first half of this year is 7,000 crores, 5% less than last 6 months. But quarter on quarter, if you take September to September 23, 3% growth. December 2022 happened to be one of the worst ever we had in the recent past, especially after COVID, March 2020 and June 2020, when we had a couple of shutdowns and everything went down. After that, you see a significant rising trend over the period. But December happened to be one of the worst ever in the recent 2-3 years. The same is reflected on the right side in the PBT also. June to September 2022 was 400 crores, which we saw in the last slide. But then you see December 22, 18 crores, almost breaking even. And good thing is after that, it has shown an upward trend. And we'll discuss this more when we discuss the business situation. But here it is more of giving you an idea on quarter, how we are developing over the last 13 quarters, starting with September 20. One of the things that contributed to this good profitability is also the net working capital development. Starting from September 20, we see how the net working capital, which was around 880 crores and 1,200 crores, is contained at 1,200 crores even for the September 2023 quarter. The dark blue is the accounts receivable, around 2,400 crores. Very well managed. We have around 60 days of DIV, which we see in the later DSO, the sales receivable. It's around 60 days, which we see in the later slide. And the overdues are very well controlled at around at below 10%, which means we don't allow any receivable to get into an overdue situation for a longer period. We ensure that the money is received before we continue to sell. So very disciplined approach there by the business units when it comes to accounts receivable. Coming to inventory, again, 1,800 crores, around 300-400 crores less than the earlier quarters. Again, September is an important quarter for us, but managing inventory at that level at around 77 days is again a good achievement based on the global supply chain we have, where the material can be brought into India and sold in a very certain time. And that ensures that the business units can still play with the lower inventory. And if you say is 77 days on the higher side, we have to remember almost 80% of our material we import, and it takes 2 to 3 months from door to door to bring the inventory into India. So it's not a big inventory. It's just required for serving the customer on the immediate basis. The gray area is the accounts payable, the one at the bottom. And that's shown with a minus 3,000 because that benefits our net working capital. Again, we ensure that we get the best terms from our customers, from our suppliers. And at the same time, the discipline followed in BASF is we don't delay the payment to the supplier beyond the date agreed with the supplier. Yeah, it's not just for the sake of increasing the accounts receivable, or rather accounts payable. We don't delay the payment. Payment will be done on the due date. And we have 3,000 crore negative there, working capital. So net 1,200 crores net working capital. Coming to revenue development by segment, the one on the left, 7,470 is last year 6 months, and 7,082 is this year 6 months. And the bridging shows that agriculture solution did exceptionally well. Yeah, over and above the good performance that it performed last year, where it recorded 1,100 crores. This time it was 1,200 crores, so 100 crores more than last year. Yeah, exceptionally good performance, and we see the profits also in the next slide. Surface technology is another good story for us. It has coatings and catalyst, and coatings had turned around, and catalyst also did very well in this 6 months, adding 100 crores to the top line. The others, the major one that stands out is chemicals, almost 1/3 drop. You can see at the bottom, 32% drop from last time. Volumes we have maintained almost at the same level. It's the top line, is it the prices that have dropped. And for us, it's a merchandise business. So whatever drop, we have to take the drop and then sell it in the market. So to that extent, we are safe there. It's a merchandise business. But when the top line crashes, you see this kind of a big drop, almost 1/3. Yeah, it's pretty significant. One of the biggest drops I have seen in BIM. That's for the chemical segment. And the industrial solutions is down by 17%. We have dispersions and performance chemicals here. So going to the next slide, because I mean, this is the top line for a commodity business. In some cases, top line itself does not mean much unless you see the bottom line and see what did it mean finally to the result. Agriculture solution was around 160 crores last year, and for this 6 months, 300 plus crores. So 151 crore higher than the good result that we had last year, 6 months. So that's exceptionally good performance from agriculture solution, followed by surface technology. I already talked about the turnaround story that coatings business has, where they were able to increase the prices with some of our OEMs, and hence the prices were better, and then resulted in the better end result. Yeah, the bottom line was also positive. Except for these two, in all other cases, you see a drop. Yeah, that shows the margin squeeze. While we have grown in volumes, the prices have dropped significantly. Yeah, for the first 6 months and also for the September quarter, there is significant volume growth. But at the same time, the prices crashed, and that has resulted in lower profitability by 60 crores compared to last year. Some key performance indicators, being analysts, you will be interested to know how we are doing on different parameters, and consistently we show the same KPIs. We don't pick and choose the good ones and show only the good ones. We consistently show the same KPIs. Receivable days, like I said, is around 60 days, inventory 62 days, and cash flow from operations has improved significantly, around 350 crores of cash generated from operations as compared to 39 crores last half year. And operating expenses, which is other than raw material cost and other costs. The total operating cost also is very well managed despite the fluctuating top line and the volume growth. EBIT before exceptional item at 5.1%. More important, ROCE, yeah, return on capital employed, is a very healthy 12.9, though it's a little lower than previous year. Still, you would agree 13% ROCE is a relatively good performance. Return on net assets. I mean, since we have some good cash on hand, we wanted to see how well we have performed if you remove that cash element from the assets and remove the income from the asset, from the cash element, and see net operating assets, what would be the number. That comes to around 12.3%. So again, holding it strong. EPS before exceptional item and before annualizing is 60 rupees per share in absolute numbers. So I'm sure you'll have some questions on this later, but as of now, I'll pass it on to Alex for the next slides. Thanks.
Thank you, Naren. And so overall, given the context, I think especially now the second quarter of the fiscal year was quite strong volume-wise. I mean, 16% growth in volume and top line and also bottom line growth compared to same quarter of the previous year. And we see quarter on quarter, an improvement, which is also good. So, but we're still navigating in this overall context, and so we're always cautiously optimistic. But I think the team has done very well to maintain a good asset utilization, a good volume growth dynamic, staying close to customers, being able to get as much business as possible to maintain our relevance. So I think that has been done very well. And then at the same time, as Naren explained, keeping a very tight grip on our net working capital, which I think is important, especially in times like these. So just a few additional insights before we go to the Q&A. We wanted to just show some additional developments in the recent months after May. So one, we wanted to bring an example of how we are also progressing on the digitalization front. Our agricultural solutions team has launched what they call the Ag Shop. Now this is not, they didn't launch it this year, so this has been active for a few years now. I think it was launched in 2020. But what we can say today is that 99% of all the B2C orders are placed through the Ag Shop. This eliminates a lot of paperwork. It's real-time, data. We're very data-driven. We're not gut feeling driven. We're data-driven. And you can see your order. You can see where your order is placed. We also have a track and trace a concept where when we ship products to our wholesalers and even retailers, they can scan the box, with the and then we can see also where our inventory is placed in the country, which is very helpful, especially in times when we have erratic monsoons, when delayed monsoons or a lot of drought, because it doesn't happen across the country everywhere. So we know by knowing where our inventory is sitting at every time within the season, we can also make sure that we send the right product to the right place in the country. And I think this Ag Shop is allowing us to do that. So very, very successful digital tool that is massively utilized by our customers in the agricultural solution space. Obviously, we're also continue to engage with industry and academia. Here's just one picture from July where we were talking on sustainability with the Department of Chemicals and Petrochemicals and also FICCI. Obviously, BASF is always being asked by the chemical industry, what are we doing on the sustainability front? Because we're seen as a thought leader and an action leader. So very active on the sustainability side. Then we're also happy to share that the 6th year in a row we have received the award, the Avatar and Settlement Award, one of the 100 best companies for women in India. Diversity and inclusion is a key topic that we continue to drive. And in fact, this morning I was at the Somaiya University, and together with the Indian Chemical Council, we actually launched a new CSR initiative where we're inspiring young females, that are bachelors of science or masters of science in the chemical space, and they will undergo in the next 4 months a training to bring them closer to the industry and to increase their skill set and their knowledge, and eventually allow them also increase the opportunity for them to be placed for an internship in chemical companies like BASF or others, or even permanent employment. So we're really trying to make sure that we continuously work on the pipeline of female talent in the chemical industry, and we're really leading here with a new initiative. I was able to welcome 40 female talents this morning, that will undergo this 4 months training. And I think this is a great initiative, and we'll certainly see more of this. We've also been awarded here in August by one of our key customers, Gabriel, which is a key automotive customer, which supplies a lot of the OEM automotive customers as the best supplier. So strong recognition by multiple stakeholders, be it the Indian Chemical Council when it comes to responsible care, be it by a customer, a very important customer like Gabriel, about best supplier, be it in the diversity and inclusion space, or be it on the sustainability front. And with that, I would really like to conclude. So first, I think I'm very happy and I think the team has done a fantastic job to really deliver a very strong second quarter, despite continued margin pressures. And we also see a quarter-on-quarter improvement. We are seen as a responsible chemical manufacturer and as a recognized partner of choice by customers and stakeholders. And obviously, our focus areas moving forward continue to ensure sustained profitable growth by staying close to our customers, maintain prudent control over our working capital, continue to optimize and sweat our assets, drive sustainability, ensure safe and efficient operations, and obviously our most important asset is our employees. We continue to fortify our talent pipeline and promote diversity and inclusion. So with that, I would stop here and really very happy to take your questions.
Thanks. Thank you, Alex and Naren, for this. I would go with the first speaker now, Mr. Varun Bang from Bryanstone Investments. Varun, are you there?
Hello,
Yes.
am I audible?
Yes, please go ahead.
Yeah, hello everyone, and thanks for the opportunity and congratulations for strong performance in the agri division. I have a couple of questions, but before that, I have a small request to you, Alex. So, in broader terms, if I see our parent, it has been very proactive as far as investor relations are concerned, and that is not just in terms of arranging regular meets, but also in terms of providing guidance. They also share business plan and they also talk about 3 to 5 year roadmap for the business. I had indicated this to the previous management and they had said they would think on those lines. So I would request you to kindly look into this and be little open on investor engagement side, because we don't know what are BASF's plan for next 3 to 5 years and what BASF is working on. And unless that information is very let's say very sensitive to competition, we should have some roadmap on those things and share it with investors. So and also, we have been requesting for a physical meeting, and it has been almost a year since you took charge of the company. So I would request you to request for a normal one-to-one interaction or a small group interaction.
Thank you, Varun, for those comments. We'll take that into consideration.
Okay, just two quick questions on agri side. What we see is our performance is far better than most of our peers. So what is working for us on the agri side, and how are we placed in terms of inventories in the channel? Is there a threat of stock returns going into next 1 or 2 quarters?
Thank you for that question, Varun. So I think there's multiple elements why. Obviously, I cannot speak about our competitors. I can only speak about our business and what our team is doing. I think first and foremost, the team is always ahead of the curve, being quite proactive to develop risk mitigation plans. And once certain risks materialize, because delayed monsoon, dry month, and a Nino situation is sort of the new normal, right? So you basically have to plan with it from the onset. And if certain risks materialize, I think the team immediately activates the mitigation plan. So that's, I think, one element. What does that mean concretely? If you have a delayed monsoon and a quite dry situation, usually disease pressure is lower. Yeah. So what does the team do? Obviously, we look at, okay, how can we mitigate maybe a lower fungicide situation with more insecticide or even herbicide. Yeah, usually herbicides and fungicides are affected if it's dry. So I think the team very proactively and activates these portfolio compensation measures. So that's one. Second, we try to place our products very close to the application timing. That allows also to navigate through, okay, in which part of the country is product needed right now, and what other part of the country is maybe less product needed. Yeah, so I think we don't place our products into the channel too early. I think that's a second element. And I think you all know that we've launched Exponus, which is a blockbuster insecticide, now has become a blockbuster insecticide in our portfolio. We were always strong on herbicide and fungicide, but we were quite weak on insecticides, and insecticides is actually the biggest market in India. We're very happy that we launched Exponus, has had a very, very strong performance. And in fact, we received registration of another insecticide, a new mode of action, in October. So we will be launching a new insecticide going into next season, which is also enabling us to balance our portfolio, to not only sit on one leg, be it fungicide, or two legs, fungicide and herbicides, but also have a third leg in our portfolio. And then to answer your second question, which is about channel inventory. So fortunately, we don't have significant channel inventory because we do not aggressively push into the channel since we place our products closer to application timeline. So and as I mentioned before in the digitalization example, we know where our products are sitting in the country at any point in time, which is also very helpful because then you can have a very effective and efficient inventory management and send products not based on gut feeling to a certain part of the country, but based on data. So I think those are some of the elements that I think stand out of why our team has performed quite well. And I think the team also has very strong plans into the future.
Okay. And what is our revenue share from top 3 products on the agri side?
So I think we have many products in the agro portfolio that are significant and are important. I would say that some of the key blockbusters would be Exponus, insecticide, Tinzer, herbicide, Preaxor, fungicide, and then hopefully the insecticide that we just received registration a month ago will certainly also develop over time to become a significant product in our portfolio. So we're not just sitting on one product that dominates our business.
Okay, and correct me if I'm wrong, but I think some of our key products like Exponus, Westnit would be completing 3 years of launch over next few years, and thus end of the marketing exclusivity. What are our plans to minimize the impact of competition in those products? Can you share some plans, and how is our product pipeline going into next few years?
I mean, we always make sure that in our portfolio development, when we look at active ingredient development and launches, when we look at, we always go into mixtures, different type of formulations and applications and label extensions. So we always ensure that we extend the life cycle of our active ingredients and mixtures over as long as possible period of time. But this is also one of the reasons why the R&D investments that BASF generates globally in the Ag space is the highest. Yeah, so we constantly invest significantly into R&D exactly to bring new modes of actions like the one we just received a registration in October, to bring new modes of actions that are not in the market. And that's why we are also an R&D company, yeah, to constantly evolve our portfolio and bring new products to our customers and our farmers in India. And that will enable us to continue on a sustainable growth pattern in this business.
Okay. One question on materials segment. What challenges are we facing in the materials division? And if we were to see some sustainable improvement in the margin performance of this division, what steps do we need to take? And how are we looking at addressing issues in the materials division?
Actually, I mean, the materials division has, if I look at the April to September development, the materials division on a volume perspective has done quite well, and especially the monomers business has recovered a bit from a volume perspective. The challenge that we're facing is on the pricing side. The prices are still heavily under pressure, but volumes are doing well and have improved a bit compared to the first quarter as well in this segment, especially on the monomer side. Performance materials. So the materials segment is performance materials and monomers. Monomers was having a very difficult time as we started, has improved now over time, especially on the volume side, still under heavy pressure on the pricing side. Performance materials, which also caters to the automotive industry, has done quite well on the volume side, but has also been impacted price-wise. Yeah, so I think our focus there has been to make sure that we utilize our assets to the maximum, that we maintain prudent cost control, that we capture every volume opportunity possible. And then obviously we're waiting for the pricing, for the pricing pressure to subside over time. Yeah, but it's very difficult to predict then when that will happen. I think there was a big expectation that after the Chinese New Year, the Chinese demand would pick up again. It hasn't. I think now slowly there are some light at the end of the tunnel, that also in China now demand is slowly picking up, which should hopefully reduce a bit the pricing pressure over time, but we're not seeing that impacting yet. Yeah, but that's a bit too. So volume wise, I think material segment is starting to improve.
Okay, one last question. Alex, during our last interaction, you had mentioned that BASF has good pricing power and we are being able to pass on the price inflation. But besides agri, we continue to see subdued profitability in most of the remaining segments. So, be it chemicals, surface finishing, nutrition and care. So, what are the key reasons and what steps are we taking to improve the overall margin performance? And how can we look at, adding more value to existing products to improve overall financial performance? And in which of the segments there is higher scope for value addition?
I think, yeah, but thank you for that question. So I think in a global context that is so massively impacted not only by very, very soft demand, but potentially also by overcapacity and inventories that have been built, over time. It's a very, very competitive environment. Yeah. So even though you might have pricing power, if the competition is just too vast, yeah, and I think it's a cyclical situation. We will come out of this cycle eventually, and I think we see at least some indications that in China now the demand is picking up, which should reduce also a bit of the dumping into other countries under very low prices because of overcapacity and oversupply. So I think it's a cyclical situation that will start, hopefully, to improve a bit. So even though you might have pricing power, you're still going to be impacted by this massive context, yeah, that I think the entire industry has been facing. Yeah, I think we have been doing quite well. If you look at our Q2 results, compared to maybe some other companies, I think you will realize that BASF has done quite well here to navigate through this situation. When it comes to the future, I mean, it's very difficult to make future predictions, but I think we have a very balanced portfolio. I think we have upstream, we have downstream, we have different segments, which also gives us some resilience that if one segment is struggling, be it upstream, be it downstream, we have other segments that can that can balance it out. Yeah. I think the most important thing, we're an R&D driven company. So continuing to invest in research and development, continuing to bring new products to our customers, to stay close to our customers, to bring differentiated products is going to be fundamental to sustain our growth moving forward.
Thank you.
Okay. Thank you. Thank you very much, Alex, for answering all my questions. Thank you.
Thank you, Varun.
Thank you, Varun. The next speaker is Sanjesh Jain from ICICI Securities Limited. Sanjesh, are you there online?
I'm sorry, I didn't unmute myself.
Yes, please go ahead.
Good afternoon. The first question on the financial performance, particularly on the PBT side. We carry an inventory of close to 77-80 days, and there has been a steep fall in the prices in last two quarters. So can you help us understand how much of the impact we had because of the high cost inventory we were carrying, which would have optically reduced the PBT margin, which otherwise should have been even better. Can you help us understand that number? That will be very useful.
Thanks, Sanjesh. Yes, the commodity prices have been pretty volatile, and we have been proactive in managing the inventory in a situation where we don't have to take a big hit by the end of the quarter. Yeah, on a quarterly basis, we market to market and ensure that the prices reflect the realistic situation, the current market situation. And for the September quarter, we did not have any major hit to the inventory valuation. Yeah, whatever higher inventory we had already consumed, and that is getting reflected in our profitability already. Does that answer your question? So we don't have...
So Q2 is more of a cleaner quarter. That it's more representative margin what we are looking at then.
Yes.
Yes. My second question is on more competition from the China side, and we have alluded on the point that there is an overcapacity situation today. Even if I look at BASF global presentation, there we have talked about the production in China going up over by 12%, while globally it is declining by 4%. So what is the situation for our product in terms of competitive intensity from China and India?
So I think, I mean, and correct me if I'm wrong, Naren, here as well. So we don't only, so we supply our products from multiple regions, right? So it's not, we're not only impacted from the supply perspective from China. When it comes to the competitive environment, yes, you're right, Sanjesh. I mean, the situation in China has been extremely competitive, especially since the demand in China had slowed down so much. There was this situation. I think what we're seeing now is that is starting to improve, maybe not in the magnitude that we would like to have it, but it's starting to improve, yeah, which is at least promising signs that we might come back to a better reality, yeah, and that the margin pressure that we have been facing and the industry has been facing will hopefully subside a bit, yeah. Although we're not seeing that right now substantially, yeah, neither on a global level nor locally, as you can see also in our results. But we are, by having a prudent cost management, net working capital management, ensuring that our volumes and our assets are well utilized in India, that we stay close to our customers, that we bring the right products at the right time. I think that will give us a good head start if the pricing situation will start to subside and improve. Yeah. So I think making sure that we have had a good volume track and growth, I think, is key in times like these.
Fair enough, but can you help us understand from our 11 product portfolio we have, in terms of scale, where is the competitive intensity more, whether it's AgChem or chemicals, and where it is the least, and which are the bright spots where we are seeing early sign of recovery, at least from the competitive intensity perspective?
I think we have competitive intensity in all segments, to be honest. I mean, you cannot say or pick out one segment where we don't have strong competitive intensity. Even in the ag segment, we have competitive intensity. We have strong ag players in India and in the region. So I think it's just important that we continue to bring differentiated products to our customers, that we stay close to our customers, that we also are present in all parts of the country. And I think that's what the teams are really focusing. But it would be difficult for me to say in this specific segment we have less competitive intensity. I think we have strong competitive intensity everywhere.
Got it. Last two from my side. One on what are the capex plan? Do we intend to increase more production capacity in India than depending on the imports? That's number one. And number two, globally, BASF has a very strong battery portfolio. Any plans to bring that into India? These are my final questions. Thank you.
Thank you, Sanjay. So we don't disclose any specific capex numbers. Yeah, what I can tell you and what you also have seen over the last years is we continuously together with the business units, and every business unit analyzes obviously how the demand situation is developing in the country. We continuously invest, to expand our capacities. Examples are the Dahej second line that is well utilized now. Yeah. Examples is an expansion in Panoli that we had done to increase our polyamides capacity there. We're also investing in Thane in the polyurethane application lab. So and in Mangalore in the e-coat production for EC for the coatings business. So we are continuously expanding our production and development capabilities in India, and we'll continue to do so as we continue to utilize our assets very well, and the demand increases. Yeah. So I think historically we've had a good track record to continue to invest and expand as the business progresses and develops positively.
Our own manufacturing ratio is also at 50%, and it means there is a scope to improve it further.
Yes.
50% is own manufactured and 50% we merchandise, which means we import and sell. So as you can see that there is good opportunity to improve that.
On the battery question, Sanjeev, that you had, I mean, this is a segment that is definitely developing in India, although the electrification, the mobile electrification, let's say, is still developing, and I think there's a long way to go. I think there's very strong aspirations by the government, and there's a lot of companies that are very active in this space. I think there's still some way to go, but I can assure you that we're very active here, talking to key players, be it on the two-wheeler side or on the four-wheeler side. So I think BASF will be participating in this segment, not only with battery materials, by the way. I mean, automotive segment is a key segment for BASF altogether. So we have many different business units catering to that segment. So I think the electrification trend is there. I think more acceleration is expected, and BASF will certainly participate in that space.
Fair enough. That answers all my questions, and best of luck for the coming quarters. Thank you.
Thank you.
Thank you, Sanjay. The next speaker is Rohit Nagraj from Centrum Broking.
Yeah, hi. Good afternoon, gentlemen, and thanks for the opportunity. I'm audible?
Yes, please go ahead.
Thank you. So first question is on the overall general situation in terms of inventories across our 6 business segments. in domestic market and in global market, given that you guys track both domestic as well as global markets? And an allied question to that is in terms of the dumping from China, what is your assessment whether it has dramatically declined or is it continuing? And if it is continuing, what is the assessment in terms of till when it can continue as per your assessment? Thank you.
Yeah, thank you, Rohit. Let me start with the second part of your question, the dumping. I think if any of us could answer that question, I think we might not be today. It's very difficult to predict because it all really depends also on the demand picking up again to a level that will be visible in the market. So I think we still see a very, very heavy competitive pressure. But there's also some early indications that maybe the cycle is turning into the right direction now. Yeah, but I think we're cautiously optimistic here. We don't want to overpromise and underdeliver on any statements given here. So very difficult to say. And I think it also probably depends segment by segment a bit. But we still see a heavy competitive situation, which is why you see also on the pricing side, we've had still some impact. On the first question on the inventory, I mean, I can speak for India. I think Naren was showing our inventory development, our net working capital development. I think we've really maintained a very prudent and tight grip on inventories, especially in times like these. Yeah. I mentioned a bit of the example of our agricultural solutions team on how they also handle not only the inventory we have, but also how we supply the market, and our distribution partners and channel partners, that we're very prudent there to make sure that we don't overexpose ourselves on the inventory side. But we still keep enough inventory to be able to cater to the growth and the demand in the market and to our customers. So much I would say on the inventory side. I don't know if you have anything.
Yeah, well explained.
Just a follow-up on that. In terms of the channel inventory or the market-wide inventory across our subsegments, are there any particular subsegments where we are still seeing that the channel-wide inventory is relatively higher? Our inventories obviously would be at optimal levels, but in the channel or in the market, these are still at higher levels in the domestic market. Thank you.
Very difficult for me to answer. I mean, we have 11 different business units. We have 5,000 customers in India. Understanding in detail what the inventory situation is at each customer and each business unit is probably a difficult prediction. But I would say that given our track record, we don't necessarily see a big issue here. Yeah. I think we are not usually a company that pushes too much, especially the demand in the market is really not fully there. Yeah, so we cater to the demand that is developing. So that's as much as I would say. Naren, I don't know if you want to compliment.
So in addition to what Alex said, if the question is specifically on agro, even there the inventory is very well controlled. We have less than 400 crores of agro inventory among the 1,800 crores that I talked about. So we don't see that as an issue. But again, talking about channel inventory of the competition and all, we don't have that oversight. And even if we have the oversight, we may not be able to talk about that openly. So does that answer the question, Rohit?
Yeah, fairly. So thank you. Second question. Yeah, the second question is in terms of our own manufacturing, which is 50%, as you rightly pointed out earlier. What is the approximate capacity utilization across these 3 or 4 business segments? This is, I mean, I'm not talking about granular details in terms of exact 60-65%, but just to get a perspective that where our incremental investment would be directed if some of those capacities are already operating at fairly high or optimal utilization levels? Thank you.
Utilization is kind of optimum. 80 to 85% is the capacity utilization overall. Of course, we will not be going at the plant level, but around 80-85% capacity utilization is already seen, and it's consistently held for a couple of quarters.
So we have we're sweating the assets, and obviously where the businesses see need to expand, we do that, and we have consistently done that also in the past. Yeah.
And just one last financial question. What was the capex for the first half?
Capex for the first half. It's around 50 crores, 45 to 50 crores for the first half.
Sure. Thanks a lot for answering all the questions. Best of luck and have a good evening. Thank you.
Thank you, Rohit.
Thank you.
The next speaker is Aman Shah from GT Investments.
Hello. Hi. Good evening, team, and thank you for taking my question. Just an extension to the previous participant's question on capital expansion, capital expenditures. So we said we are at optimum utilization levels right now. And what will be our thinking on capex plans now? Will it be more incremental, or maybe we'll require a large-scale capex like we had done in the age, say, a couple of quarters from now?
I think we do not, disclose any sort of future capex plans. Again, I just repeat that where we see a need to debottleneck, to add another line, that we have consistently done that also in the past. The businesses are constantly evaluating this. I think India is quite well placed here. I think this situation is not necessarily visible across the world. So, whereas in India we have a good capacity utilization situation, it is not the same in other parts of the world. So I think there's still upward opportunity to increase utilization also in other parts of the world. And obviously we can also benefit from that because, we import also materials. Yeah. So nonetheless, I think as Naren pointed out, our own manufacturing product share in India, our intention and ambition is to increase it over time. And I think we've also shown that in our history that we're able to do that. It's difficult in times when globally, when the demand is still soft and when there's a heavy pricing pressure, we have to maintain a very prudent cost control. We have to maintain a very prudent cash control. And obviously any CapEx investment plans will heavily be scrutinized on a global level. Yeah. And I think this is not only true for BASF, but probably for many others. Yeah. So we just have to have good business cases. And if our business cases are strong, I'm sure, we will be supported. But the situation is certainly a very difficult one for the chemical industry globally right now. So any type of investment, especially when you have underutilized assets in a lot of parts of the world, will be heavily scrutinized.
Right. Okay. Second to that is we know we have the margins are better in own manufacturing, while in trading it will be single-digit margins. Just want to know whenever there is a capex, how is the return on net assets look in an own manufacturing product portfolio compared to a merchandise portfolio?
I mean, definitely we cannot talk about that topic, but how we evaluate a capex in terms of profitability. But what I can say is own manufactured goods also has, which means setting up the capacity also has the risk of having the fixed cost, which you don't have in a merchandise business. Yeah, in own manufactured business, you have set up the plant, and if the capacity goes down, you still have to take up the idle cost, right? So, from that perspective, the metrics are different when we evaluate a capex business and use the opportunity to import and sell under merchandise.
Sure. So that was the reason, like presence of fixed cost and even the starting phase of underutilization of capacity was the reason to ask, like general return on net assets are better in own manufacturing compared to this merchandise. That was the reason to ask. Yeah.
Yes, correct.
Okay. And on volume growth for Q2, we said 16%. What will be for H1 of this year?
H1 was around 5 to 7%. 16 quarter, Alex said, was for September quarter, and 5 to 7% is for the period.
Okay, thank you.
Thank you, Aman. The next speaker is Devansh Nigotia from Securities Investment Management. Devansh, are you there? Devansh,
Hello.
are you?
Yeah,
Yes,
can you hear
yes,
me?
yes, go ahead.
Yeah, hi. Devansh Tekotia here from Safe Enterprises. I wanted to understand for solar mall, what is the content per EV battery, and what is the global opportunity size, and in India, what will be our wallet share currently?
Software ball.
EV battery, I think EV.
No, this is in Bangalore.
Devansh, can you just specify again? Are you talking about battery?
Yeah,
EV.
battery chemical solar mall. Yeah.
I don't have that number right now on the top of my head, but what we can say is that I think we had the launch and it was quite successful. The magnitude of that product is probably still smaller. You know, it's a bio-based product, but it's sort of a green product, and I think we hope that over time it will also continue to increase. But I don't have the exact number right now off the top of my head, Devansh. We can certainly
just to add on, Alex, here that most of the subromol currently being produced is for the export markets. So as you know, the battery ecosystem in India is still evolving. The applications are not that many, and there are not many customers as of now which uses subromol kind of products. So most of them are actually being produced for the export markets.
Okay. And in terms of capex, I mean, we have been mentioning over the past couple of years that we want to increase the manufacturing, but when we look at our capital expenditure per year are below 100 crores for a company which is doing sales of 10,000-13,000 crores. So who is the decision? Who is the decision maker here in terms of, is it the parent which is guiding whether to do capex or not, or how independent is BASF India as an entity in terms of taking this decision to increase the manufacturing mix?
Yeah. Eventually, let me take. So first, I mean, the markets, the chemical market size of India compared to global is around 3%. The share of our business in India is also around 3%. So we are in line with our footprint and our presence in India in terms of business to also the chemical share of India globally. Obviously, we cannot speak about any sort of capex investments or future investments. It is, what I can tell you is, it is clearly my ambition, my intention to bring as much attention as possible in the company to India, and I think we are making progress on that. Yeah, India is a strategic country, and I think in the current context, also geopolitically, macroeconomically, I think India has had a very solid track record. So I think we can, with confidence, really showcase our performance and bring as much attention to our country as possible. And I think we're doing that all together as a team. Now, obviously, the ultimate goal is that this all translates then into additional support, potentially even additional investments. Yeah, but that those decisions have not been taken, and we're continuously evaluating opportunities in India. I can assure you of that. So we're having that clearly on our radar. It's a focus area, but obviously we're part of a bigger family as well here as a global multinational company. So we just have to have very attractive business cases as well that make financial sense and also technical sense. And if we achieve that, I think we'll get a lot of support. Yeah, so I'm confident of that. So for me, I always say it's not a matter of if, it's really a matter of when is the right moment, the right time, the right investment with the right partner, and I think we're working on that. Yeah.
So while you can understand, Devansh, capital allocation is a corporate or central topic, right? It will be decided by any parent company globally. Where at the same time, the country also has a responsibility to show the opportunity, showcase the opportunity, and say this is where the capital should come. We see it from a customer's perspective. If the customer wants a product, is it better to import it or is it possible to manufacture it locally? And when we can justify it is better to manufacture it locally, we will get the capital allocation. So when there's an opportunity, there is no dearth of capital for us to bring in.
It all depends on the critical mass what you have.
Okay. Thank you. Thank you for answering the question.
Thank you. The next speaker is Tarang Agarwal from Old Bridge Mutual Fund.
Hi, am I audible?
Yes, please, Tarang. Please go ahead.
Right, hi. A couple of questions without wanting to get a timeline on how and when you deploy your capital in India. The question really is to understand what are the key considerations that will drive you or global to drive significant capacity creations. I come from the background that BASF globally has a $60 billion balance sheet, right? Your investments in India are roughly about 250 to about $280 million. So while the global revenues might be 3%, capital allocated is much little. So just wanted to get a broad brush in terms of what would drive that kind of capacity creation into the country. So that's number one. The second question is, I also understand that India becomes a it is a nice market where you can harness your global manufacturing capacities, right? You often alluded to lower capacity utilizations globally, and therefore, given that you have a $2 billion or a $1.8 billion market, you could use capacities globally, feed into India. So some sort of clarification there. And the second question is, in the agricultural business, in the crop chemical business, is it only crop protection or do you have seeds also in India? And are there any specific crops that y'all are heavy on and crops which y'all might want to get heavy on in India?
Yeah. Thank you, Tarang. So let me start with the first one. So, I mean, obviously there's multiple factors that influence our thought process, our evaluation process as we consider opportunities. I mean, first and foremost, obviously, if you want to make a large scale global investment, there has to be a demand, a local demand that is sufficient to justify that. Yeah, we usually do not invest in a country to export from that country because we're present everywhere in the world. So when we make a large investment, our driving guidance is that there is a local demand that can sufficiently justify that this investment will be well utilized. Yeah, because if you have a 20-30% capacity utilization of a large scale investment, it's not going to be financially viable. So I think that's one. The local demand is one. The willingness to pay also. I mean, obviously we are a multinational company. We invest in research and development. We bring premium products to the market. So obviously there has to be a per capita consumption at a certain level also that would justify where our products would usually participate. Yeah, I think that all these KPIs are developing in India well. Yeah, it's going in the right direction. It's accelerating. The GDP is growing. The per capita consumption is growing. There's a aspiring growing middle class. So I think all of those trends are clearly moving in the right direction. But besides the demand, the local demand that has to justify a large investment, we also have to look at the feedstocks that are available in the country. And there are some feedstocks, chemical feedstocks, that what we don't have. There might be captive use, but be it propylene or other type of feedstock. So we also there have to evaluate how do we get a sufficient feedstock supply. And then you enter into discussions. Okay, what type of partnerships do you need to have? Which partners make sense? Where we complement each other? Where also the cultural aspects match? And so there's a lot of elements that certainly influence these type of discussions. And again, I think we're on this topic. We're having these discussions, but the global context is certainly not helping right now. Because capacities are not fully utilized elsewhere. And I think we have to have a good, vibrant global economy running for us also to generate, as a global company, more cash to do more capex investments, to justify also bigger investments. Yeah, so I think that's the current context. The current global context is not necessarily helping, but we are not waiting. We have to analyze constantly opportunities. Yeah. So I hope that answers a bit the first part of your question. The second part of your question on agro, we are active in the seed space. We have Noonham's vegetable seeds. So there we are having a business.
Not in BI.
But it's not part of BASF India Limited. Yeah, so it's a separate legal entity. It's a separate legal entity globally. Yeah, so it's a separate business run from a global perspective, differently, but it's vegetable seeds. But there are synergies between the vegetable seeds business and our agricultural solutions business. The teams talk to each other. We serve similar type customers. And we obviously try to generate synergies, even though it might be in separate legal entities.
Okay. And any specific crops that you guys are heavy on, and crops that you might want to focus more on in India?
I think, fortunately, we're stepping into segments like insecticides from a portfolio perspective, balancing our portfolio better. Yeah, so and obviously it goes into multiple crops. Yeah, it doesn't go only into one crop. I think we're very present in fruits and vegetables, but we're also present in field crops. Yeah, be it soybeans, be it oilseeds, be it now, obviously be it cotton, be it wheat. So we're both in field crops and fruits and vegetables. Obviously, we would like to also step stronger into the rice segment, the insecticide rice segment in the future, and we're working on that. But we're very happy that we have already, one blockbuster insecticide with Exponus, and we're launching now another one in the fruits and vegetable space next season. So we're really amplifying and increasing our insecticide footprint.
Wonderful. Thank you. Thank you so much.
Thank you, Dharang. The next speaker is Archit Joshi from B&K Securities.
Hi, sir. Thanks a lot for the opportunity. I just have one question. In your pro forma numbers, I could see a significant drop in the capital employed for the agri solutions business, and it's largely led by similar kind of a quantum of drop in the assets that you have deployed. Could you explain the reason as to why the capital employed has dropped there? And just an addendum to this, what kind of assets do we have in India for the agri solutions business? Thank you.
So whatever drop you saw, Archit, is inventory reduction. we are currently holding one of the lowest inventory we had. I mean, I'm talking only about from BASF India perspective, the lowest inventory we had for a long time. Agro has been very effective in liquidating the inventory, and that is what is reflecting. We don't have any other capex in India for agro in BIL. It's inventory, capital employed in inventory has gone down.
Right, sir. So it continues to be predominantly a merchandising business for us.
Yes.
Got it, sir. Thank you. Thanks a lot. All the best.
Tolling. If you specific there, it's tolling.
Toll manufacturing.
Got it. Sure.
Any other question you have, Archit?
No, sir, that's it from my side. Thanks a lot. Thank you.
Thanks. Okay. Is there anyone online? Any other questions? Okay. So then, is there one? Okay. We have one hand raised by Ranjit. Can you unmute?
Yeah, hi. Am I audible?
Yes.
Yes, Ranjit. Please go ahead.
Yeah, hi. Thanks for giving me this such of opportunity. Just one question that I had is that in the opening remarks, Mr. Naren has mentioned that also about the BASF catalyst business. Just wanted to get a sense. I believe that's not part of the listed entity. That's again outside the listed entity. Is that understanding correct? On the second is just to give a sense about how many companies do we have outside the BASF India listed entity, and are there any thoughts to merge them to make one India entity? Thank you.
With regard to the catalyst, when I referred to that, Ranjit, it was process catalyst. Yeah, that is part of BASF India Limited. The other catalyst business, which is in Chennai, the BASF catalyst is emission. Yes, emission catalyst. So it's for automobile. That is not part of BIL, BASF India Limited, whereas process catalyst is part of BIL, and they have been doing very well. Merchandise business.
And Ranjit, to your second question, there are no plans to merge the other BASF group companies in India into BIL.
Sure.
Basically,
Thank you.
BASF India, we have 4 other companies. It's Chemital, India Private Limited, then it's BASF Chemicals. We have Nunems India, which is into the vegetable seeds business. And then, as Naren said, we have BASF Catalyst, which is into the mobile emission catalyst business.
Done. Thank you, Naren and team. Thanks for that clarification.
Thanks.
Thank you.
Thank you. Is there anyone else? Yeah. Okay, perfect. So thank you, ladies and gentlemen, and I thank you for your attendance and participation at the analyst meet today, and wish you a nice evening and a nice weekend.
Yes. Also, thank you from my side.
Thank you. Thanks, sir.
Thank
Have a
you.
good